Hello, this is Parag Kapdi once again with the chart analysis on EGR, Ecograf. Before I proceed, I would request you to go through this disclaimer. Very important. No financial advice is being given in this video. So please do your own research. This is just a regular educational video that I have been doing and nothing more, nothing less than that. So please keep that in mind. Yeah, so what are we doing today is we're going to see, this has been the chart of Ecograf in the recent last 6 months. As you all know, Ecograf had a very ordinary last 2.5 3 years, where the price had dropped all the way from $1.10 to 7.4 cents. This was way back in December 2024, so last around 6 7 months ago. And since then it has had a spectacular run all the way to 47.5 cents on the way up without any correction. And then we have had, for the last around a month and a half, we have had a pretty sideways to down move. And I was talking to a friend of mine who just said, Parag, the price of Ecograph is falling. So I said, okay, let's analyze it on a chart and see whether the price is falling, as in whether it's in a downtrend or whether the price is correcting. So the correction happens in an uptrend. Yeah, so when the price corrects, so it goes against the trend. So let us establish where we are at. So we have got this bottom of 7.4 cents, the high of 47.5 cents, and this is the golden crossover. This is the 50 moving day. The green line is the 50-day moving average, which is crossing above the 200 day moving average. So this in charting perspective, this is a very important threshold, and it is called as a golden crossover. And the price actually did that. So it just had a one-way run uh, without a single day correction all the way to 47 cents. So since then, we have lost that momentum. And so when my friend said the price is dropping, I said, let me see whether the price is correcting or dropping, as in whether this is a start of a new downtrend or whether this is just an against the trend correction. So if you see here, the price after making this high of 47.5 cents, for the next 6 weeks, it has been sideways to down. And in that process, it has actually retested as you can see on the 6th of May, it has retested the 50-day moving average, which is a very uh, in technical analysis, this is considered to be as a very positive sign, right? And since then, we have had we in this last week a very good end to the week. Yeah, the last 2 days. So as you can see from here, when the price was going up, the volume was pretty high volume. Yeah, every day. And this is just the Australian listing. There's a similar German listing where you will find the same kind of chart, but it's in euros. And the volume out there was also very strong volume. And when the momentum was lost, the price has declined on on a very small, on a very minuscule volume. So this volume out here, if you can see, for the last 1 month has been negligible volume. So this is again another positive sign, where when the price goes up, the volume is high, and when the price is correcting, the volume is just a fraction of that. So that is another box to tick. as to whether this is a start of a new downtrend or whether this is just a correction. So for me, I would take this as this last 6 weeks as correction and not as another downtrend. So let's see where we are at and where we can go. So I'll be using some very simple Fibonacci retracement and extensions to see uh, where we can see the price in the next X number of weeks. Again, this is not any kind of recommendation to buy or take any actions based on this, because this is a penny stock. Price can move in just a matter of a few days, uh, just on the way down as it has been on the way up. So please be careful. So what we are doing is now we are just taking the price which was the low from here, 7.4, to the high which was for 47.5 or 47. I think it's 47.5. Yeah, sorry, 47.5. And where did it retrace to? So if you see here, the price retraced to 23 cents, which aligns perfectly with the 61.8 level in Fibonacci, which is uh, of all the of all the levels in Fibonacci, this is one of the most widely looked out for. So this has actually retraced just to 23 cents and not fallen below that in this retracement, which is another positive sign to uh, take note of. After that, as I said, this week we had two very uh, higher volume than normal, and the price has just closed at the day's high on both these days, and we are now approaching this 35-36 cents level, which we need on a closing basis next week. So that will be 26th of May. So if we can close above 36 cents next week, that will be another box which is ticked. So I'm just saying what is needed to get uh, back into the mid 50s or even higher. And for that, I'll be using, let me hide this Fibonacci. Yeah, and let me get the Fibonacci extension, and let me hide this price labels also for now. This will just come in the way. Yeah, and let me hide the golden cross also. So we'll just use the Fibonacci extensions just to see where we are. So I'm taking the low of 7.4 up to 47.5, and if the price does not, so if the price does not drop below 23 cents now, then it opens up a very interesting upside. Again, uh, just be careful. Yeah, when I'm talking about any upside, no recommendations out here. So the first level that as you can see here was 32.5. Yeah, which we have closed on Friday. We just closed just half a cent above that, which is a good box to take. And the next level is this gap that we see out here, which so 38 will close this gap. So, and this will be the 38.2 Fibonacci level out here. So in the subsequent weeks, we want to see weekly closes above this level. So 38 and then 43 to 47 will be a bit difficult in my opinion, without any big news, because anybody who is trapped out here in this recent fall will try to exit in this 43 to 47 mark, and that will be probably cause at least one double top scenario out here. If there is news, then all these levels will not matter. It will just react to news in a very violent way in either side. So if there is no news and we somehow reach 47.5, then I expect some correction again down here to 43 or even all the way down to 38. If there is news, we will definitely, sorry, I shouldn't use the word definitely, but we should then see uh, 62.5 cents, which is the 100% extension of this fall from 47 to 23. So, and if you remember, guys, this 60 cent mark was a very important psychological level, because when the price was around 80 cents or something on the way up, 2021, we had a major capital raise done at 60 cents. Now, I'm not saying that all those who bought in that capital raise are still holding, because most of them would have sold in this drop all the way down to 7 cents. So there's not much supply that I expect around 60 cents. Nobody should be holding it at this level. But as a psychological level, this 62.5 cents aligns with that 60 cents. So we can see some kind of selling pressure at this point. Again, if there is some very positive news which we all expect, then these levels should not matter much, uh, which takes us to subsequent levels. In my opinion, if we break 62.5, then 87 is a very likely target. So beyond that, I'm not ready to go above that at this point. These are all uh, too far away scenarios. Even 62 cents is too far away. But these are the price that we have seen in the last run. So 62.5, 87, we can play for that at the moment. Yeah. And if the news is the news from Germany, from Tanzania is what we expect, then we'll look at subsequent levels. So that's it. Just wanted to do a video on, because a few people have asked me, and yeah. So hope to see your comments. Let me know what do you guys think. Just a very basic uh, uh, interpretation. More on this as we get some more green candles. Yeah. Yeah. One more thing. Now this 23 cent level is our line in the sand. Yeah. We should not close below 23 cents for this upside to be present. If we start closing under 23 cent, then all this analysis will not hold water. So keep in mind, 23 cents is our on a closing basis. 23 cent is our most important level to watch out for. Okay, thanks for watching, and hope to see your comments. Bye bye.